afternoon, good day, people. It's another day in the market, and we still are try figure out how to optimize, getting into the financial markets, and kind of been working on a little thing myself. You understand? So this is um kind of my little, how they would say, edge in the market. Today was so far today has been a profitable day. Not gonna lie. This is um, kind of my little, how they would say, edge in the market. Today was so far today has been a profitable day. Not gonna lie. This is, mm, this morning earlier today I had gotten, well, not from today. Last night I had gotten a trade from somewhere down here, and I took some profit there, and I felt bad because I was saying, when I saw this big move, I said, yo, I shouldn't take profit yet because I could have get a little more profit, you understand? But it was what it was. And then now I started looking back for an entry around here, and I exited somewhere around, I think it was probably somewhere around here that I exited, and the second entry for the day. Yeah. But what I want to do is kind of just go through what me I work on. So just bear with me. What I'm going to do now is just write out what I call. Uh, so everybody has their playbook, right? So the playbook, a person's playbook, I guess, is just basically what they're looking for and how they and what they need to do, certain confluences that they look for in order for them to take an entry, right? So the playbook might, from what I've been working on, my playbook gonna be pretty simple. So basically what I kind of notice right here. So what I notice is that each day each day has its own cycle, right? Cool. That one. So each day has its own cycle. Then two, from what I notice, the market gives two particular setups from what I notice, right? Yeah, but before I reach here, so each has a particular cycle. Two, I use support resistance method to trade, right? Boom. Three. Market give two particular setups. That is breakout, which is a breakout of support or breakout of resistance. Now everybody have their own concept of support and resistance. See, everybody has their own concept of support and resistance. My concept of support and resistance consists of two candles basically. Consists of using bearish candles as support and bullish candles as resistance. Right? Cool. Now you may ask what I mean by using bearish candles as support and bullish candles as resistance, meaning that we have a lot of them, right? Which is a fair question, and I'm going to get there. Cool. So 5, after we get a breakout of support or resistance, breakout, we will see what ICT calls. I'm just using this for referencing. I guess a lot of people will be familiar with it as well. So we will look for what is referred to as, let me say fair value gap here. Yeah, right. May not be spot on, but I'm not an ICT trader. I'm just noting what I observe. Yeah, understand. Right. Cool. Or what I call space to exploit. I call that space for exploitation. Yeah, I mean, Danvo would call it uh, vantage point, right? Or space of exploitation. Or what I will call, because I like, you see me is a kind of football person, so me gonna say, yo, midfield area, you see me? Or the gap. Let me say midfield area. Or space for the true pass. Through pass, you get me? Yeah. So after seeing that now, we after seeing the open space, we look for how an entry candle will open. Look for wicks before taking an entry. All right, cool. Boom. So that the rules I may work with, right? I mean entry $2 up. So we go back to the charts now. I'm gonna show you how I do it. That's the 30 minutes. So like I was saying earlier, let me get the fresh chart. Like I was saying earlier, we use support and resistance. And in doing this, when we use the support and resistance, it is something that occurs every day, right? From the market opens at 5 p.m. each day, it is something that happens. But even though it happens every day, there's a certain pattern to how price delivers itself. You understand? And the more you get to have an idea into that, the better it is. So for instance, you have what I call a three bar. Sometimes you have like what I call a three bar play. No, let me not go there. Sometimes they have a series of bullish candles forming before you get a bearish candle, right? And sometimes they have a series of bearish candle before you get a bullish candle, right? And that happens um from on all time frames. I suspect even from the 1 minute coming all the way up, it happens. You get me? So I hope I can show you both examples. So as I said, sometimes you get the series of bullish or bearish candle before getting the opposite change in color, or sometimes you will have where you get a bullish then a bearish candle, or you get a bearish then a bullish candle, and those are the candles that form our support and resistances, right? So like here, we're on the 30 minutes time frame. So like here, we saw that when the market opens on Friday, we got we got 1, 2, 3 consecutive bullish candle before getting one bearish candle. So after getting these three consecutive bullish candles and getting this one bearish candle, what I would do is pull out my horizontal line, and since this is the only bearish candle at the start of the market, basically, I would mark this as my first bit of support, and this, because the market came all the way up here, giving a three consecutive bullish candle before pulling back, I mark this as my resistance area there, right? Oh, what I do is that after I identify those two areas, I'll be looking for either price to break out above here, this resistance, or to break out like it did here at the support, right? Strong candles. So after seeing that, I know that I would be looking for buys, right? To fill back this area here. I'll be looking for buys to fill back this area, right? But in order for me to get the buys, I want to see a candle come up. I don't want to see, after getting this, I don't want to see the next candle come up and close inside here, and then I'll wait for that. So this is what 8 o'clock, and this is 7:30. So after this 7:30 candle closes, I would have loved to see the 8 o'clock candle come up and close inside here. And then now when this 8:30 candle started, I would have wanted to see a bottom wick. I would have wanted to see the candle open, make a bottom wick here, and as it start to push back up, I'll take the buys coming up to here, right? But I'm going to show you that. I guess it's better to show you, and let me go on the 15 minute and show you probably clear on the 15 minutes. So we go to Monday. Ooh. So as we can see here, at the start of the market, we had a series. Okay, so this was the bearish candle. So we had a series, a bullish candle, 1, 2, 3, and then this fourth one was the first bearish candle. So I would mark this as a support. And this last bullish candle would be the resistance. Let me change the color there. That would be the resistance. Now, like I said earlier, we're looking for, after identify these two areas, we're looking for a breakout here or breakout here. In this case, we got the breakout to the upside, breaking out above the support, above the resistance, right? So this is the signal candle now, which signal tells me after we get the breakout, I'm looking for sales. But in order to get the sales, I want just like this now. I would have wanted to see this candle come down, close below, like it did. Then it came back and give me a top wick here. I would have taken the sales. Boom, and fill the range. And that would have been like what? That would have been 100, 130 pips. Easily done, right? Easily done. But this is the thing. We want to start analyzing the market at the start of every hour. So this market started 5 p.m. and it 5:15. By 5:45 we got this setup, right? 6 o'clock is here. By 6:15 we got the signal, and this is how we have to look at it, right? Notice 7 o'clock is here. The same setup, bullish candle, bearish candle, getting the breakout here, getting a breakout below resistance and below support in confluence. Pull back at the resistance area, boom, get the fall off. And this is how we kind of expand it out into the larger time frames. So after we get this played out, would have I would probably move to the 30 minutes time frame now to see what kind of setup, because that is how the market flows, you know. You have to flow with the market. So you move from the 15-minute to the 30-minute. Um, and also what I have noticed is that if you're trading the hourly candle, it is it is to stay on the 50-minute and the 5-minute time frames. But as you cross over into the 30-minute time frame and above, from the 30-minute to the 4 hour time from the 30-minute to the 2 hour time frame is what you can probably use to trade the 4 hour, trade on the 4 hour, and then you use a 4 hour time frame to trade the higher the daily and the weekly time frames. You get me? But what I also notice is that, so you move from the 1 hour, when each hour starts, you can stay on the 15 and the 5 minute and trade those ranges. So um for any particular hour you can probably get one good trade on the 15 minute without overdoing it. And then you move now to your 30-minute, which, say if you're looking at your 30-minute time frame, if you look at, well, you use, if you're trading the 1 hour, you use a 15-minute for entries, and you get probably like a one good entry there, and you call it a day. When you're looking at a 30-minute time frame for entry, you're basically 30-minute time frame to 2 hour time frame for entries, you're basically trading the 4 hour time frame, and you can probably get a one good entry there as well. One good entry and you call it a day. You understand? So uh, moving to the 30-minute time frame, we expand the ranges. We carry it there and here. Now we see the same thing playing out: resistance or support, break to the support. Oh, we break to the support, but we never get the. We got the signal for the buy entry, but it never give us the remaining confluences to take the buy entry to the top of the range. So we would have left that. No, so the 4 hour would have started from, yeah. So we would have left that and move on to the other 4 hour, which other 4 hour would have started at 9 p.m. So at 9 p.m. we get this new 4 hour setup on the 30 minutes with this being a resistance now and this being your support for the new 4 hour time candle, right? Boom, you get the breakout here above resistance signal. We're looking for the sells. We get the second part of the signal, but the third part, well, is open here. Yeah, so the third part, we would have needed a top wick here to come down, but we never got that. So that wouldn't have been played out. That wouldn't have played out there. So we move to the next 4 hour, which would have started at 1 a.m. I will get this, moving the range from there. I will come here, boom. We get the breakout to the downside. This candle almost came back up and closed inside. It never really did it. So we would have missed that entry from Monday, right? That was in the morning. So that was 1 a.m. So we move to the next 4 hour, which starts at 5 5 5 a.m. So we get all of this here, boom, boom, boom. Series of bearish candle, first bullish. So our support is here. Our resistance is here, right? Signal candle, second part of the confirmation. Never got the third part, so we would have left that. But look at this now. Boom. Breaking and closing below support. This is signal candle. Second part of the confirmation. This this is the entry candle now. We can see that. We can see that when this candle opened, it came down first and gave us the wick here, and then push up, boom, 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 hit TP at the resistance there. And that is where price took off from. Hit it right there, boom, TP.